All right. Matt's question is up next.
Is that Matt or Max?
Matt.
Matt.
One T or two T's?
I knew you were asking. I knew it before it even came out. I knew he was asking that question.
It's with two T's.
Okay, two T
Same
Matt.
as our Matt, the spelling. So, okay. It says, could you explain the downsides of having too much money in your Roth bucket, like Roth 401k or Roth IRAs? Or is there a downside? I don't know. Interested to see what you say.
Can you tell me what's wrong with being too wealthy? What happens if I have too much money, right? Like, okay, I'll try to approach this well. Realistically, there probably aren't a ton of downsides to having too much money in the Roth bucket. You know, we talk about the three buckets that we want you to have. We want you to have the tax-free bucket, that's Roth and HSAs, the tax-deferred bucket, that's your 401ks, and then your after-tax bucket, your brokerage accounts. And generally, what we like to say is we want you to have money in your after-tax bucket because realistically, you're not supposed to be able to get to your Roth assets until after age 59 and a half. But you guys are financial mutants out there, and you recognize that there is a little break glass in case of emergency clause when it comes to Roth IRAs that you actually can get to your Roth basis earlier than 59 and a half. Basis meaning the money that you've put into the Roth. So if you have a large enough pot of money that it's all in Roth, I'm going to use a ridiculous number. Say that you have $10 million in a Roth IRA. Is there going to be a downside to having that as opposed to having $10 million in a 401k or an after-tax brokerage account? Maybe not. Assuming that the basis is large enough that it can bridge the gap from when you need the resources until the time that you get to 59 and a half. You have to make sure the contributions are large enough to satisfy that. But absent that, I'm having a hard time thinking of another downside.
Okay, I'll put the low-lying fruit is there's a little bit of a hassle factor, obviously, getting to your Roth money. You have to take a distribution.
Okay.
Other things, some paperwork. So we'll say there's a little bit of a hassle factor. However, the real struggle with Roth money, first of all, you emotionally are going to get so connected with your Roth money because, I mean, when you recognize that the government restricts how much you can put in every year, what you can make, if you make too much money, they don't even want you funding these things because it's a true great benefit. I mean, when I talk about the wealth multiplier and the dollar has the potential to become $88 for that 20-year-old, and then you think about 87 of those dollars are strictly from the growth. How cool would it be if they're tax-free?
Yeah.
And you do this thousands of times over, you can quickly see emotionally, you're going to be like, it becomes your precious. I love my Roth assets. So there's not really a problem with having too much Roth money. I guess if you get too much, the government starts wondering if they should change all the rules for everybody else just because one billionaire did some creative
Let's not go down
stuff.
that.
But it's true. That's the only thing negative I can say is because otherwise it's more of the emotional struggles you'll have because I have found that people load up their Roths and then even when you get to financial independence, usually you want to keep your Roths even at the as you get older because they're great legacy and
they're not subject to required
and
distributions.
estate planning things as well. You know, you can pass those on and let your heirs have those 10 years to continue to grow in a very tax favored way. So Matt, if it's a trick question, you're trying to trip us up, I'll give you the low lying fruit of hassle factor. And easy access to cash because you don't want to be using this as like your emergency reserves. But other than that, we absolutely love Roth money. It's one of the first accounts you're going to fill up when you start investing. And it's going to likely be one of the last accounts you ever take money out of if you don't even take money out of it because you just pass it down to your loved ones later.
But I want to hit the commenters. I want to head them off at the pass because what I can hear is the next line of thinking, and this is going to riddle all through the comments, is, all right, well, if Roth is that great, why don't I put everything in Roth right now? Why don't I try to get my Roth bucket as big as possible? Now, I think if that was where you're going to your question, Matt, there are merits to contributing to other accounts in lieu of Roth. Specifically, if you are in a higher tax bracket right now, and you can do pre-tax contributions or tax-deductible contributions to some type of retirement account, then you're going to have a substantial amount of tax savings. And if you're going to be in a lower tax bracket later in life, in retirement, you'd rather get the tax savings now and pay the tax later. There's an arbitrage that you can take advantage of there. So just because we're saying there's no downsides, if you end up with a bunch of money in Roth, that's not to say there are not downsides that ought to be considered when it comes to deciding to contribute to either pre-tax or Roth.
But to do that, you have to have a very high income tax currently, but and it could be sweetened with or soured.
I'm going to say not
with
sweetened.
higher
Not sweetened.
state income tax. I mean, if you think about like if you're a high income person, let's just say California. I'm not trying to pick on California. It's just one that comes to mind easily. 37% federal tax rate if you're in the high income, and then a 13% state income tax. You can quickly realize that we're at 50%.
That's big.
And so it's things like that then have you say, well, I know when I retire, I'm potentially going to move to a state that has zero income tax, plus I'm going to have a much lower tax rate in retirement. Now there's that arbitrage situation, especially if you retire pre-75, that maybe while you're in those lower income years, you're still going to try to convert some of that money to Roth. So it's not that that strategy that Bo said is against Roth. It's just you're changing the timing to maximize the tax planning opportunity.
Love it.